Wow, someone just won the Powerball jackpot worth $699.8 million. And it's the seventh largest jackpot winning in US history. And it got me thinking, okay, how much do lottery winners pay in taxes? Because the winner definitely does not take home the full amount that is advertised during the lottery. And of course, a large part of the lottery winnings are immediately withheld for taxes, and you'll likely owe the rest during the next tax season. And at the same time, the winner would also be bumped into a higher tax bracket, which means they'll owe a larger percentage than what they're used to paying to the IRS. So in this brief episode, what I want to do is break down how much taxes the recent $699.8 million jackpot winner may pay in taxes. Stay tuned. Okay, let's go ahead and get into this. Could you imagine winning $699 million? What would you do? Okay, would you buy a mansion? Would you buy a fancy car? Would you invest it? Or would you go to Mars? Okay, but seriously, what would you do? Now, with me being an accountant, I already know that the taxes are coming. So my first move would be trying to figure out the net take-home pay after taxes before I do anything else. Which, by the way, if you do ever win a lottery, I would suggest that you do the same thing, and this video should help you do just that. So let's go through the estimated tax bill for this lottery winner of $699.8 million. But we'll go ahead and round it up to $700 million just to make the math a little bit easier to follow. So the first thing, number one, the lottery winner will have to decide whether or not they want to take a lump sum amount or if they want to take an annuity. So in this case, the winner could opt to take $496 million as a lump sum, which immediately means they're giving away $200 million. Or the winner could take home the annuity that pays the full amount of money, but over a 30-year period, which means they'll basically get roughly $23.3 million per year for 30 years. Okay, so which one would you take? Would you take the $496 million lump sum, leaving $200 million on the table? Or would you take the $23.3 million per year? I'm super curious, okay? Tell me in the comment section below, and I'll tell you exactly what I would do in a minute. But first, let's talk about the taxes. So on the $496 million lump sum payment, you would pay roughly $183 million in federal taxes, which is $496 million times the highest federal income tax rate today, which is at 37%. But it doesn't end there, because you would also have to pay some state taxes as well. Now, in a state like New York, the lottery winner will pay approximately an additional $45 million in taxes. So in this scenario, if you take the lump sum amount of $496 million, there will be an estimated tax payment of $228 million, leaving a net take home pay of $268 million. Okay, would you take it? Before you answer that, let's look at the taxes on the annuity. But really quick before I do, if you're new to our channel, hey, I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. If you find this video topic to be interesting as much as I do, then please do us a huge favor by hitting the like button for the YouTube algorithm and helping it to reach more people who want to learn about lottery taxes. So if you decided to take the annuity payment, remember, you will get the full lottery amount, but over a 30-year period, which would be close to $23.3 million per year. And at that rate, you will likely owe about $8.5 million per year in federal taxes, which is $23 million times 37%. And if you live in a state like New York, you will pay about $2 million in taxes per year, leaving a net income or net take-home pay of $12.8 million per year. And if you add up all the taxes over a 30-year period, you would actually pay more in taxes, because remember, you're taking home more money, which would be a $315 million tax payment over 30 years. So if you're following along with me, then you're starting to realize that the taxes are kind of similar. And at this point, you're probably thinking that a lump sum payment is a lot more attractive. Okay, but here's the thing, okay, and here's what I would do. Okay, I would take the annuity payment for two big reasons, and I'll also give you a third one as well. So number one, which is pretty obvious, okay, it gives you the most earning potential over the next 30 years. Okay, you make more money. And if you are young like me, then God willing, you still have some time. Okay, and number two, and more importantly, I would deploy different tax strategies every year to help reduce my taxable income. And in that way, I will be able to take home more money and pay fewer taxes, just like the ultra rich people do. And so maybe that net $12.8 million that we talked about earlier turns into a net $20 million. And over 30 years, I'm taking home over 90% of my winnings versus a lump sum payment where you have one tax year to find the right tax deductions and the right tax credits and the right investments. I mean, in one tax year, that's pretty much impossible. All right. So you're probably not going to have the time to be able to put together, at least carefully think about putting together a tax strategy if you take the lump sum payment, which leads me to reason number three that I would take the annuity, because having the lottery money dripped over time in an annuity payment allows me time to actually learn how to properly manage this new wealth and learn how to smartly invest my money. And there's all kinds of stories out there of lottery winners or even big NFL and NBA players who end up going broke because they did not know how to manage their money. And the truth is, it really takes time to learn how to master wealth. But anyway, that's just what I think. Okay, what do you think? Don't forget to tell us in the comment section below if you would take the lump sum or the annuity. Now, if you want to learn more about individual or business tax strategies, then we have 2 more videos coming up next that you should definitely check out, and we'll see you over there.